And we are live. Good morning to everybody. We are live. Thank you for joining me right now on Beyond the Markets. We'll be joined by Stephanie soon. And welcome to our online cast. We'll be joined by our radio audience very soon when they're ready. Thank you very much once again. I know that it's been a while. And I know that we've gotten a few messages, people asking what's been happening to the show. We did have a little bit of a downtime, but we are back on full broadcast on social media and all the platforms for all of you to digest and consume. And today we're talking Futuristic Friday. And welcome for anybody who's with us today. Give us a shout, simply just comment and share with one of your friends who is actually watching today on what we on our topics of discussion today and also on the day, and also share, tell them to join. This is critical information and also some sort of deeply discussed opinion in some form, but well researched opinion for what you need to discuss. So in order to get started, we do, as I said, we do have our main audience actually joining us on the other side of the spectrum. We do have Stephanie on the other side of the line. Good morning to you, Stephanie, and how are you doing?
Good morning, Winyumba. How are you?
I'm good, and it is time for our Friday conversation. But first, let's get through what's been happening in the markets just to round up this week. It has been an interesting week. So, on the Futuristic Friday discussion, today we'll be discussing, going through where the Kwacha is right now at 20.7506. It's actually at one of the lowest places it's been for many. Talking about since about April, March. This is really getting close to the all-time highs of about 21, heading to 22. Remember, the Kwacha really bottomed out around 22, so we have a little bit of a trek to go. But we are seeing a non-stop movement of the negatives of the currency. Down 0.71% yesterday. The dollar is up 14.66% year to date, while it is in buying posture. Stock market was up yesterday to a new all-time high, thanks to another movement up by Copperbelt Energy Corporation, which is officially the very first Zambian company to cross the 10 billion kwacha mark. You heard me. Copperbelt Energy Corporation has officially become the first Zambian publicly traded company to have a valuation of 10 billion kwacha or more. Yesterday's stock market, it was up by 3%. It's got a valuation of about 10.075 billion kwacha. Yesterday, the stock market was up 0.78%, up 4.71% in the 7 days, and up 24.41% year to date. Bond market was up as of yesterday, up 0.1% and down 0.65% in US dollars. Interest rates are still sitting around 24.6341. Now, moving across the market, we are also seeing that there is, we did see that the rand is also up 1.55%, up 1.51% year to date, and it has been oscillating. But you can see since the 8th of August, over the last month, it has been on a general upwards trajectory. So the rand is actually getting stronger and stronger against the kwacha. Now, in terms of the bond index, bonds up 18.73% year to date, while the GRZ bond index in dollars is up 4.28%, obviously due to the loss of value in the dollar. And interest rates are still sitting at about 24.63, up 0.99% year to date. Now, in terms of commodities, we did see copper down about 8 to 8,323. Now, copper's been struggling to hold anything above 8,500 ever since the bad Chinese data, and ever since we've continued with the rate hiking cycle. But the views that there's probably going to be a recession somewhere in 2024. Copper is expected to then bounce back in 2025 onwards, when we start to see stronger EV demand and stronger smelter capacity. But we are trying to see a lot of investment in it, but there is a lot of downward low demand when it comes to copper, mainly due to Chinese economic activity. That's been a negative on the story. But unfortunately, crude oil is still topping at around 90.1, still around those 10-month highs, mainly because of Saudi Arabia and Russia cutting supply with sluggish non-OPEC supply coming in. I gave you my fuel report and the outlook. Now, this is obviously leading to the fact that we are probably looking at about a 32 kwacha pump price by the end of this month, if we do not see a change in the dollar or supply chain of the oil market. But if we continue along this trajectory, we're on the route to have an oil somewhere around the value of about 32 kwacha per liter for petrol. Now remember, diesel is a bit cheaper because it comes in using a cheaper pipeline, but diesel itself as a finished product is actually more expensive. It just comes in because it's got cheaper procurement costs. But petrol still has to come in through diesel trucks. So when diesel prices go up, it also affects petrol altogether. But we are seeing that they probably will be higher petrol, but still weaker dollars. Even though in trade data we did get some better outlook, and I will go through the trade report. Trade is actually quite important for us to look at. In terms of gold, gold is up 0.14%. As of yesterday in dollars, up 10.37%. And as I said, this is our projection. But where we're seeing the oil market so far, this is a very premature projection. It's done off the first 9 to 10 days of the month. Remember that we really have the more cemented projection after about 21, 22 days. But this is what the preliminary projections are actually showing us, that at the end of the month, the pump price is probably going to move up another 8.84%, up to 32.02 kwacha, mainly due to international factors of crude oil moving up by 5.3%, and also due to our FX rate, which has devalued by an average of about 5.3%, and crude oil 5.46%. Now, wealth insurance assets, and we've seen that Bitcoin is up 0.9% in kwacha, up 78% year to date, while Ethereum is up 0.7%, up 55.92% year to date. And gold in kwacha is up 22.09%, up 0.58% on the day. Now, in terms of our cross assets, we're seeing that bonds are up 18.7%, stocks are up 24.4%, still leading the bunch. US dollars up 14.7%. This is mainly due to CECU stocks, and gold up 22.1%. While Bitcoin is up 78.1 and Ethereum up 55.9. But when you look at things in terms of the quarter to date, how are things looking at so far quarter to date? That's the wrong date up there. But quarter to date, bonds up 4.8%, stocks up 10.6%, dollar is up 18% year to date, gold is up 19% in kwacha year to date, Bitcoin is down 0.5%, Ethereum up 0.2%. So you can see the volatility, especially in your crypto assets. But the dollar has been a little bit strong. That's why in times of stagflation, it's good to have a little bit of dollar exposure into your portfolio. Remember that dollars are very volatile. I don't tell people not, I tell people to broadly diversify and make sure, but over a period of time, do it slowly. Don't be overconfident in one. Yesterday, we did see some of our four horsemen data. We did see that Mexican inflation, in terms of year-on-year inflation, dropped to 4.6%. PPIs in Mexico did rise by 0.1%, signaling that there is inflation pressure. But the biggest inflation pressure is also coming from the fact that U.S. inventories again dropped by 6.3 million barrels. So we're seeing a lot of drops in the U.S. inventory, which will push prices up. Spanish interest rates were up again in both 10 and 30 years, so we can see that there's interest rate pressure. UK mortgages rose by 0.25% to 7.85%, and interest rates in the US are still elevated about 5.28 and 5.29, as we still have elevated interest rates from the Federal Reserve. Now, in terms of the industrial sector, we are seeing that the Halifax Pricing Index did drop yesterday, with European industrial production also dropping and building permits in Canada also dropping. So weak industrial data came in yesterday. In terms of economic growth, so South African GDP slightly pick up, but still weak, 1.2%. Swiss unemployment up 2%, that's negative data, while we're seeing Italian retail sales drop to 2.7% growth. Employment changes in Europe dropped to 1.3%. European GDP growth slowed down to 0.5%. Jobless claims in America did drop, and also farm productivity in America also rose slightly. So we've got mixed but mostly negative reads in terms of economic growth. We've got negative reads in terms of industrial demand. We've got high interest rates. We've got inflation starting to push up a little bit, obviously because of energy costs. And that has been our four horsemen outlook, which is giving us a read on how the global economy is actually operating. Now, I'm going to quickly switch to our trade report, because we did get trade data last week, and we should actually be looking at that. But last week's trade data, remember that we take about a week to report on net trade. We're going to be going through an in-depth discussion on ownership, but we're going to be talking just quickly about net trade and where trade sits. And one of the key factors that we are looking at with trade is that net trade yesterday rose back. We did see a recovery, a slight recovery in trade, up to a 5-month high. That was the July trade figures that we got from Zambia, from Zamstats. which we usually follow. But the July trade figures did show that trade went up to
Mm.
100. Trade rose to $125 million. Okay, there was $125 million of net trade, which is higher. It's about 160% higher than the previous month. But it's also 5 months. It's also now up to a 5-month high. So this is our trade report that we're looking at. Now, the main commentary I will give you here is that we saw the fourth consecutive rise in net trade and the second consecutive month of positive net trade, up to a 5-month high of 125 million. Month on month, we saw imports decline by 3.4% and exports increased by 5.5%, which led to a 161% increase in net trade. However, that figure for July net trade is down 43% from where it was in July. The key driver is exports, which have slightly recovered. Copper exports rose to an 8-month high of 73,600 metric tons of copper, pushing copper exports to above $600 million for the first time since January 2023. So we've actually seen elevated copper exports as of last month in July. Now, at the same time, July also saw a drop in consumer goods imports for the first time in 3 months, dropping below the 300 million mark and not becoming the number one trade source. And there was a slight recovery in mining, but it does not mean we've had a full export turnaround. So I think there's still that mix. So here's what we're talking about here. Trade dropped horribly in March to negative 135 million dollars, but we can see that it's recovered slightly, almost to where it was in February, but we haven't got it as high as it was in the years before. But this $100 million trade, meaning that we're probably on track this year to see the first net trade that is below $1 billion for the first time since 2019. We've had $1 billion of trade surplus since 2019. We are on track to see it below that for the first time since 2019. Now, this is obviously your trade summary, which shows that there was a big drop in agricultural trade, down 43% month on month and down 40% where it was last year. Non-agricultural, non-traditional trade is still up 24%, both year to date and month on month. And traditional rose by 5.7%, but still down 7% as to where it was from last year, but still up. And I think that's what contributed to the 5.5% increase in exports, and therefore pushing up net trade to 125 million. Now, in terms of imports, you could see that consumer goods imports were down 8%. That was the thing that really pushed imports down. There was raw materials imports, which were down 6%. There was capital goods also. Now, this has been what we call year-to-date trade figures. You can see that this is the lowest we've been year-to-date in terms of our cumulative net trade of $448 million since 2019. So year-to-date, July, year-to-date 2020, 21, 22, you can see that by 2021, when we had record trade, we were already at $2.3 billion worth of net trade surplus by this time. But unfortunately, we're only up $484 million, showing a weak period. And you can see we've really had a negative growth in our trade sessions. Now you can see that we have had year-on-year monthly growth in terms of exports. Though we've seen declining acceleration of imports, the red line, but we saw that also slightly pick up last month. So in terms of imports, in terms of import growth, export growth, we're starting to get towards that positive export growth again. So there's some momentum starting to build into the system since March, since that horrible drop-off that happened in March when we're having flooding of mines. Now, if you're looking at monthly exports, where it's coming from, here's the breakdown that we have over the last 6 months. You can see that the majority of it is still traditional exports. And for the first time, we saw traditional exports above $600 million. You did see non-traditional exports have been rather consistent around the $250 to $300 million mark, but you did see the contraction in agricultural exports, the lowest that they've been since April 2023. And in terms of percentages, we saw traditional exports rise back up to about 65%. It was really agricultural exports that dropped from 10% of export down to 6% of export. That was the major change. Now, in terms of what are Zambians importing, if you're looking at our import activity, if you look at the top part is consumer goods, that red one. Consumer goods imports was really, as of last month, was actually the highest import. It was the first time we saw consumer goods, in other words, finished products imports, were actually higher than intermediary, in other words, inputs into production, things that manufacturers were importing. not things that wholesalers and distributors were importing. So we saw that consumer goods imports dropped from being number one back down to number two, while intermediary imports still stayed the same. The rest of the market has pretty much stayed exactly where it is. Now, in terms of the share, you can see that it's pretty much split between intermediary goods and finished goods. That's the thing about Zambians. We don't import a lot of raw materials, and capital goods have started to slow down because I think the investment cycle in terms of
So
expansion,
can we take a call, Munyumba?
it's gonna have to it's gonna be a bit out of shape, but sure.
All right. Hello.
Hello.
Hi, Christian.
Hi, how are you?
Very fine. How are you? Okay, so Ush.
Right. Okay, so returning back to the imports, the import picture. For those of you who are trying to look at where exactly our imports are coming from, remember that this is very important. Your number of imports are very important because they play on what percent of how much of your dollars are being demanded. Remember, it's your imports that make the dollar go up. So how much you're spending on imports. So if we're seeing slowdowns in output and exports, and we're seeing a lot of growth in imports, that is where the problem comes from in terms of the strength of your currency. It's not some magic tool, more than the fact that imports demand dollars, exports supply dollars. Okay. So when you have slow exports, you have a low supply of dollars. When you've got high imports, you've got high demand of dollars. When you have high demand and low supply, guess what happens to the price of something? It goes up. So it's really got to do with the problem that we're importing faster than we're exporting, and it's consumer goods exporting. Now, this is the year-to-date picture that's actually reflecting still year-to-date. You're seeing agricultural exports. It's no longer the idea that we're going to hit $1 billion worth of agricultural exports. We're still probably going to finish somewhere around $900 million. But we're not sure whether we'll clock in $1 billion unless we get some surprise figures coming in. Intermediary goods, we've seen some strong non-traditional, non-farm exports. Those have been strong. 1.8 billion. They've been the strongest they've been in this period. But the problem is we've had weak traditional exports, which is our copper. It is the lowest that it's been since 2020 by this point. Now, in terms of year-to-date cumulative exports, you can see that really it's got to do with the main number that we're looking at here is the percentage, and the worst percentage obviously is traditional exports, meaning that it's performed the weakest. And we can see the same even into the year-to-date figures for imports. Those are things you can see in my trade report later. One of the other things we're also paying attention to, Stephanie, is the copper output numbers. We have seen that copper output is at 457,000 metric tons as at this point, up 73.6, up 11% from the previous month. But in terms of where we are last year, last month's read is still 4% below. And also where we are year to date is still 12% below where we were at this point. So we're still having weak copper output. And this kind of shows you how poor the copper output numbers are. July 2023 is showing you that year to date, it's lower than where it was in July 2022, much lower. We had this high uptrend that was picking up, and then we just dropped off to one of the lowest points. However, copper output is the highest that it's been since November 2022, especially for the month of July, and that's the weak growth picture. Now, we are seeing that copper exports are also the highest that they've been since January 2023, when we had very high copper prices that we didn't have as much high in terms of price. We didn't have as much height in terms of output. And agricultural exports as well were $52.3 million during this period, but we saw that is the lowest that agricultural exports have been even over and since April 2023. That's the lowest that we saw agricultural exports. So we did see a huge drop off, and that's been a very sticky point. Exporting agricultural goods is good for the economic growth picture, but unfortunately it also has inflationary impacts because it increases the cost of our agricultural goods. So our trade outlook is saying that post-pandemic, the consumer is still recovering while the mining sector is still weak. And that's putting a lot of pressure on the FX rate. In addition, we did see that agricultural exports declined from a 6-month high of $91 million to $52 million, both down 43 month-on-month and 40% last year-on-year. And this data now questions whether we're going to have a $1 billion agricultural export sector this year. Manufacturing PMIs and construction PMIs around the world are showing weakness, meaning copper demand is going to be weak for the rest of the year, and therefore net trade is likely to come in below $1 billion for the first time since 2019, thus supporting the 2.7% economic growth. And therefore, with 2.7 economic growth, I keep saying that we're still in stagflation. Now, weak net trade is also expected to put a lot of pressure on the forex rate, and weak traditional trade is also expected to put a lot of pressure on government deficits, meaning interest rates are expected to stay high because the government is not expected to then earn money from royalties. Therefore, tax revenue will be problematic. And this is likely to reduce the probability of bond yields coming down in the short-term interest rates, and therefore lending and business lending rates also coming down. So the combination of slow growth and elevated inflation is likely to cause what we call margin compression. So the businesses that we're investing in the stock market are likely to have thinner margins, operating percentage margins, and that gives them lower profitability. So we're expecting lower profitability and also lower probability of dividends being paid. So elevated interest rates from the government deficit is also going to compress their ability to also do corporate capex spending. So in other words, expansionary activity happening on the market. And there, Stephanie, is our roundup of the trade outlook. Trade did recover last month, but we are still in a relatively weak position, and that is affecting economic growth. So one of the big questions, Stephanie, which I'm coming back to our main conversation to ask, is why do we struggle to rerun the economic engines of our nation? Why do we Zambians struggle? Because yesterday we had the big conversation recently, Stephanie, about Vedanta returning, and a lot of people have a lot of heated opinions. I gave people investment advice, but let's have the conversation about our people owning things. People like to say, what does this mean? Zambians can't run mines? I'm going to say something very important. We have the capacity to do a lot of things. We have the capacity even to run our mines. We do. We have the capabilities, in fact. We have the academic and the capabilities to run almost any type of enterprise in this country. We have skills, we have all types of things. But I think what we need to do is what we lack is an understanding of what it takes to do these things. And most of the time we get hit badly because we do not understand what it takes to own something versus what it takes to work on or work in something. So Stephanie, I want to show you a video first. I don't know how I'm going to say this because that might age me, but this is not far history, people. In 2001, I don't know if you remember, Stephanie, the Zimbabwe crisis, where now they kicked out the white farmers and the country's farm sector went into collapse. I don't know if you remember that. Okay, so a little bit of a history lesson. I was a 13-year-old boy in Zimbabwe. I was doing my yes, Stephanie, I'm that. I'm not old, people. It's not old. Okay, but I was a 13-year-old boy in Zimbabwe back in 2001, and I was doing my first year of high school, and I literally saw and witnessed the collapse of the Zimbabwean economy. I saw what happened with a bunch of war veterans or just a group of cadres at that point, because those weren't all war veterans. I don't know how 12 and 15-year-olds were now war veterans, or 21-year-olds were now war veterans, to a war that happened 20 years before that. So these were now just cadres, parading as war veterans. Went farm to farm and told the white man, listen, get out. You are no longer the owner of this. You owe us this land. And there's a whole history behind that. There's a lot of agreements that were signed, and the white farmers may have not truly honored up to their whole agreement, and the Zimbabwean government didn't manage it. That's a different conversation. The point is, they chucked them off. And they chucked them off with the assumption that the white man is rich farming. So if we chuck the white man off the farm, then we will be rich. Here is the mistake that often us Africans make. We believe that wealth is the physical asset and not the mindset of the person and the understanding. You see, I can give you a company, Stephanie, and you will run it to the ground because you do not have the understanding that I have with this company. You do not have the vision that I have, and you do not have the experience that I have. That's why in different people's hands, assets perform differently. Why? Because it's not the asset, it is the person. That's why Jesus says, for what does it profit a man to gain? to gain the whole world and to lose his soul. Because the true value, Stephanie, of things is determined by what a person can do with something. Okay, that's why when you watch Rambo movies, with a knife he can take down a whole army. You try and do that, you'll be dead by the first bullet firing. Okay, but that's because, and I know it's a fictional story, but the point is the expertise of the person are more important. So what we saw was for 10 years, people thought they could just chuck white people off. What did I see? The Zimbabwean farmer did not understand where the Zimbabwean farmer worker did not have the same relationship that the Zimbabwean farm owner had with the bank. So they couldn't get money to finance long-term crops like the Zimbabwean white farmer could. They did not have a relationship with the seed providers and the fertilizer providers. So therefore they had to pay cash, and they had no cash because they had no relationship with the bank. Therefore they could not buy inputs for the farm, and they could not operate the farm. Even if they could grow things, they didn't know where to sell it. They had no relationship with the warehouse who could store their things. They had no relationship with the buyers who could buy their things. So the lack of relationships that they did not have when they took over those farms led to farm productivity dropping by 90%, and Zimbabwe went into a horrible recession/depression. And 10 years later, in fact, not 10 years, 18 years later, here's a video, Stephanie, of a white farmer returning to a Zimbabwean farm, and all of a sudden, he is welcomed as a hero. So these people who were chucked off the farm after a bunch of keyboard activists in the urban side of the world were saying, let's take over things, now they realize that it's actually hard to farm. You need to build relationships. You need to build value chains. One of the things that ended up happening was that this kind of went downwards. So here's a video just to show you people of what happens when you take over things without understanding how to operate them in the full sense, not how to work in them. See, this is the problem. We think we can take over things because we've worked in them. We do not have the full picture of what it takes to own something, okay? Because that's a lot of supply chain management and value chain management, which we do not see when you are working at something. But here's the return of a white farmer and how they actually managed to, and how he was welcomed. Here you go.
Not sure if we're getting the sound. Okay, I hope we still have Muyumba.
I'm still here.
I hope we still have your video.
So I'm just taking that off for the meantime, obviously, because you're saying you can't hear it.
Wow.
But the point is, that was a farm worker is a farm owner who was kicked off by violent thugs. Unfortunately, those violent thugs realized they couldn't run the farm either. They realized that, just taking the white man's farm didn't make us rich overnight. Oh, wow, I guess we actually need that guy back. So it shows you that the human element of ownership is much more important. How much does the owner understand? How many relationships have they built? We call it having the human capital of things is knowing how to do something, knowing who to work with, and knowing why you're doing something. And this is the issue. A lot of us people who work in industries and companies, we know how, we don't know why, and we don't know who. That's the problem. And that's what the owners tend to know. They know who to speak to in a bank to be able to get a low interest rate. Okay, they know who to go to. They know who to go to get good credit terms for seeds and input supplies. They know who to deal with when it's time to get their crop sold. They know which phone number to pick up quickly to get a preferable price. You don't know who. You don't know why. You don't have the vision. And this is where we always break down when we take over assets. And the problem comes down, Stephanie, that we don't like to build. People who build relationships, they build visions, then they build companies, okay? We take over companies with no relationships, no vision, and therefore they collapse. And then they say, but how come Africans, when we take over these assets, they don't work? Because you didn't build the visions and the relationships that support the growth of these enterprises. So there's a deeper thing. So I'm going to share a video, and I'm sure the people will be able to hear it. I'm not sure, Stephanie, if you will. This is Vusi Tembekwayo talking about what happened when he took over a business that he worked in. Okay, he explained it and how he explains that he got a quote unquote clap. Okay, how he ended up losing because he didn't have the relationships that the previous owners had, and his business ended up dropping from 436 million rand a year down to 16 million rand a year worth of business, simply because he underestimated the importance of building an ecosystem of relationships, which he had not built. So the assumption people need to understand is ownership actually is not about the ability to execute work. That is one part. But the biggest part of ownership is actually having an ecosystem of relationships that support the efficient delivery of knowing how to do your work. Okay, so here is an example, Stephanie. As I said, you may not be able to hear it, but please, if you're in the comment section and you're watching this, please confirm if you can hear this.
Services business? Yeah, I got clapped. I used to own, anyone here know that I used to own a food services business? Yeah, I got clapped. Where's Mpama Kasinyaka? That one. I got a proper, guys, and maybe this is something so the first thing about me is I don't tell people everything I do. And I'm learning this the hard way. Now what I'm actually going to start doing is I want to start sharing as often where I fail as when I do succeed. Because I think it's a lie to just tell people when it's going well. And people go, oh no, this guy is coining it. So I had a food service because I used to work in Africa's largest food distributor company called Metro Cash and Carry. And I was a director there. And when I left, a part of my leaving the company, I said to them, I want to take the whole unit I was running. When I was running it, it was 460 million. And I entered into negotiations, met the board, presented to the board, Nedbank Capital, Investec, and a couple of other banks were major shareholders, and I went and presented to all of them. So I presented to Goss Solomon and Stephen Kossoff at Nedbank, at Investec. I went and met with, at the time, Mike was the CFO, Tom Boardman was still CEO. I presented to all of them. My business model was actually very simple. Very simple. My big competitor, I've never told anybody this, but my biggest competitor was a company you may or may not have heard of called Bosasa. True story. So my value proposition was actually very simple. Metro Cash and Carry owned Trade Center. Remember Trade Center? So they owned Trade Center, they owned the Metro store, they owned the 7-Eleven, the IGA brand. And then if you ever go to townships, there were those brands called Lucky 5 or Lucky something something. Remember those doors? Yeah, they used to have a private label called Family Favorite with the 2 F's written like this. Metro owned that business. Most people don't even know who Metro is. 1996, Metro Cash and Carry was the only company in the Johannesburg top 10 that wasn't a mining house. In 1996, Metro Cash and Carry was larger than Pick n Pay and ShopRite combined. So if you don't know who they are, hamba buzu mamako. Or buzu antwako. They definitely know who Metro Cash and Carry was, right? When I left, there were about 17 billion. So they'd lost a lot of money. Anyway, so I'm leaving because the CEO decides he wants to take a new direction. And I was running this unit, and I said to him, but I've been running this thing for like 4 years. You can't just close it. So I convinced him, and then, as I said, presented to the board, presented to the funders. So here was my pitch. My pitch was the whole business unit with the customers, give it to me. I'll run it, Vusi Tembekwayo, as a standalone business. Day one, I become the largest distributor of cash and carry, the largest distributor of retail goods to the government market. Day one, who's black owned. Day one. Okay? That's the pitch. Everybody loves the pitch. Everybody agrees. So I leave. What do you think happened day one? See, when I was working there, we got an order from Baragwanath to supply R1 million worth of bread. I took the order from Baragwanath. I sent it to the Trade Center store in Southgate. They supplied it. But it sat on my P&L as my revenue. You guys get it? Now, I get the order from Baragwanath for a bar. I go to them and I say, well, you got to pay us. No, where's the money? We hear you, but no, the order's nice. Where's the money? Guys, a company where I worked, my guy. Like, I was there. And just to be clear, they didn't parachute me up. Like, I started with everybody else, and I worked my way up. And I became one of 2 black people in the board. One of the reasons I left is because I kept fighting this thing of being the only black. Like, I don't want to be the first black, the only black. Let's just get more people. You know what I mean? So immediately I got cut off. I went from 460 million when I took over the business. In my first year, I did 16 million. That was the amount of money, that business that disappeared. Because you know what happens when SASSA gives you a contract to supply food parcels in Kuruman, yeah, to 1,000 pensioners at 1,000 rand a hamper, that's $1 million, and you don't show up on time, SASSA is not giving you that order again. So I had to go back and go, well, take it back. I took a club. The amount of money I bought that business over for from them, and the amount of money I gave it, I took a proper beating.
So I don't know, Stephanie, if you were able to hear I don't know if you were finally able to hear that video.
Everything.
Were you able to hear it? Yeah.
Yes.
So you could see what I mean is that if you do not understand the dynamics of ownership rather than working, he was working in a business and he understood, oh, this is how it works. Oh, fantastic. I know how to operate it. I've gotten it all the way to 260 million rand. He even grew it. He was there growing it, aggressively making sales. But he did not understand there's an ecosystem of relationships that support all of his activity. That's like a child, Stephanie, thinking that they are independent because they can walk and they can go to the fridge themselves. They don't understand there's an ecosystem of parents who are putting food in the fridge, running electricity through the house, making sure there's water running, securing the house. There's things you don't see that are happening. And this is the mistake we make. So people ask the question, why is it whenever we take over things like mining assets or whatever assets, they seem to always lose value? Why do they struggle? It's because there's an ecosystem. Stephanie, we do not have relationship with the banks the way these companies do. Okay, these bigger companies, multinationals, can go to big banks, get loans for 6%, 1%, 2%. Okay, First Quantum, the company in Canada, can get very cheap loans. ZCCM cannot, and not to say that that's the reality. ZCCM cannot walk into a Canadian bank and get a favorable interest rate the way First Quantum can. Okay, they can't even get as much money as First Quantum can because they have a relationship with their capital markets, and they have a reputation and a rating that supports them being able to get that. When it comes to putting copper into a copper exchange, putting copper into a warehouse, into a London Metals Exchange warehouse, we do not have those things. Those are the hidden things that we do not see. We do not have the logistics that we are supposed to have built. We haven't built logistics systems to move copper from out the ground to the warehouse. We do not have brokers on the desk to get us good contracts. By the time, by the way, Stephanie, copper has left the ground in Zambia, there's already forward and future contracts that have traded that copper already. Do we have derivative traders who are on the desks making sure that there are contracts for the copper before it even leaves the ground in Zambia? The answer is no, Stephanie. That's where the problem comes down to. So a lot of people need to understand that the reason us Zambians struggle with things is, one, we like to take assets. We don't like to build assets. This is where the problem comes. We don't like to build things. We want to take things which are already established because we are angry through history and envious. This is where it comes from. We want other people's money to fix our lives. And instead of actually saying, how do we pool ourselves together and build the banks we need? Build the mines we need. By the way, it's not just about mines, by the way. This is about banks. This is about insurance companies. This is about anything, telecoms companies, whatever, you name it. Okay? We have struggled. Why is it when Lap Green was running the Green Network, why was it running? And why is it the moment the government took it back over, it now went into horrendous debt? Okay? It was struggling to survive. Why were these things happening? Because there are certain behaviors and relationships that support the efficacy of a business. So here's what Zambians need to start doing, okay? We have the capabilities. We just don't have the right mentality. That's where the problem is coming. It's not our capabilities, Stephanie. We have the capacity to run mines. We just don't have the right mentality. And that is something we need to start changing. And the mentality is that we need to build value chains, ecosystems of relationships and connections that allow our products to bring in cheap material, process very well, and then take them out. Whatever it is, whatever you are doing, you need to build the right sequence of relationships and the right market. So when you are building your businesses, people, it is not about just the business unit. Why will one business thrive better than the other when they have the same machinery and same capabilities? Because one business has invested, Stephanie, in relationships. They've invested in operating in a very good value chain, an ecosystem that enhances its value, while the other business only focused on the business activity and not the ecosystem around it. And I hope that's something we take away, because every time you kick these foreign investors out, you're going to keep bringing them back, because you'll come to realize that, oh, so it wasn't just about going down a shaft and getting copper. And there's selling, there's brokerage, there's banking, there's all these things, and we don't have the relationships for that. When we go into a bank, we're getting a 20% loan versus the old investor who'd get a 2-3% loan. You see the difference, and you see how that affects the capacity of the mind. They can get $10 billion worth of funding. We will struggle to get even one. Okay, and therefore the mind is struggling to even go deeper and to have cash operating in it. So this is the lesson I want as many of us to start learning, even at a personal level. We need to focus people on building, not taking. Because when you have a taker's mentality, this is what a lot of activism and all this stuff is encouraging Zambians to. No, let's just take. Then when we take, it doesn't work. Then we start wondering, why is this thing not working? No, didn't this happen? And we start saying all sorts of things. But the reality is, you must build, must create. If you do not, if you try to shortcut the route to wealth, you see, you can fool people with your emotional rhetoric, but you can't fool God. God does not allow you to reap where you did not sow. And he's going to punish you harshly every single time you try and do this. Yes, they took our land from us. But Stephanie, let's be honest. It's not like we had thriving mining enterprises on that land. So we can't, yes, they took our land. Okay, so then let's get back the bare land and then build a mine on top of that. Not this thing of taking the mine they've put on that land and say, no, you owe us the mine as well. No. You did not build the thing they put on top of that land that made it productive. They took your land. So take your land back and then build on top of it from scratch again. Jay-Z had this one saying, and I'll close with this.
If you're able to, yeah.
Yeah, I'll close with it. He said, guys around say they made Hov. He says people around there say that they made Hov. Okay, then make another Hov. He said, if you are responsible for making me, then make another me. And that's where the test comes. And I'll leave that there.
Thank you very much, Munyumba. It's been a very good Friday. Hoping that we'll be together again next week. For now, it's bye.